They created the #1 porno cartoon in the world, and I said, something is really wrong here. You need to have at least $100 million in revenues and at least $10 million in net profits in order to get listed by a major underwriter. And if I would have held on to them, $400,000 investment today would be worth over $200 million. Here's an IPO, here's an investment, and here's potential result. So we're going to talk about probably one of the most important tools in financial markets, which is initial public offering, which is IPO, short for IPO. In my career, I was able to bring several companies public, though the process started years before that. Many of these companies used probably one of the most important tools is the capital of shares as a capital to purchase other companies, to grow, to finance their growth, to finance acquisitions, to finance their expansion. The way actually the process would start is the company, first of all, would need to have a financial audit. Usually for initial public offering on one of the major exchanges like New York Stock Exchange or London Stock Exchange, you need to have 3-year audits. So you need to have 3-year audited financials. These financials, again, if you want to have a proper listing, a proper underwriter, so choice of underwriters, companies or firms like Goldman Sachs, Morgan Stanley, top firms, the audit has to be conducted by one of the big 4 audit firms like Ernst & Young, KPMG, and the 2 others. It's a lengthy process. As I said, you need to have 3 years audited financials. So not many companies are ready to make that formal disclosure, because it is a formal disclosure of everything that you do and how you grow, and the audit digs deep into every penny that you actually spend or raise or save in terms of the company. Once the audit is completed, what companies usually do is they will issue some other formal non-market instrument like bonds. So they will issue a form of what is called convertible bonds. The convertible bonds have an ability for people not just to receive a certain interest rate, but also to be able to get a certain allocation of shares on the IPO. So it's a very attractive instrument. And there are actually some of the most successful funds out there that invest in market instruments, are funds that invest into convertible bonds, because they have basically a double protection. So they have a protection of lien not only on a corporate guarantee by the corporation, but also guarantee of the shares of the company that they can convert their debt into. Again, I actually know personally several fund managers that achieved significant returns for their investors by investing in these type of instruments. So usually this convertible bond is issued sometime about a year and a half prior to issuance of the actual shares. Also, when the company has a commitment from an underwriter for an IPO, they can actually use their future shares as a pledge to raise capital even before the initial public offering, if that is necessary. I know some great stories. I know some great failures. I actually was an investor in a company that was a first producer of cartoons on internet in mid-90s. They did incredible work. Actually, they created the #1 porno cartoon in the world. And there was another company, IT company, this was in 1999, that proposed to buy us out at a valuation of the future shares, their shares that were going to be listed on I believe they were coming on NASDAQ. And the valuation for our shares was like $300 million. I owned 25% of the company. And the story was we were invited by the CEO of the company to come to his house. The guy was probably in his early 30s. He bought, I do not know how much he paid in 1999 for his loft, but it was a single floor loft space, maybe about 3 5,000 square, maybe more, 5,000 square feet. I was greeted by two black dogs, and I said, something is really wrong here. So the guy took money. So Goldman Sachs was the underwriter on his initial public offering. They created what is called a collar. So collar is the pledge of the shares for the future IPO, and your underwriter can actually provide you funding for the pledge of the shares, which they did, which he spent on buying the loft, the dogs. I don't know what kind of car he was driving. I'm sure it was something quite expensive. And when the crash of IT in 2001 came, the IPO never happened. He lost everything. And obviously, we never received our 300 million for our company. But in smart hands, IPO is a very important instrument that, as I mentioned before, allows the company to use their shares as a financial instrument for future expansion, for purchase of other companies, for creating manufacturing, for really all the necessary purposes for company expansion. Of course, companies do fail, and we know many failures of publicly traded companies, but majority of them have failed not just due to the fact that they overspend or not grown fast enough. These are also some of the reasons why companies fail. There have been many fraud cases where companies got listed and they blew up the books, and even underwriters did not see what these companies have done. And later, the people still found out, and the companies went bankrupt. So IPO is an important instrument. The company, in reality, in order to do a listing on like off exchanges like pink sheets, can have revenues of 10, 20, 30 million dollars. Of course, they will not receive a strong underwriter, but in order to get listed by a major underwriters whose names I mentioned, like Goldman Sachs or Morgan Stanley, you need to have at least $100 million in revenues and at least $10 million in net profits in order to get listed by a major underwriter. My success failure stories was Starbucks coffee. Starbucks, Howard Schultz was a close friend of my partners. Actually, the first Starbucks coffee shop opened downstairs of our building in New York City. The first Starbucks coffee shop in New York opened downstairs of our building in New York City. And together with Alex Brown, we underwrote their initial public offering. Actually, we did the convertible bond offering, and then we did the IPO. And as a managing director and a partner of the company, I received shares, which I later sold. And if I would have held on to them, $400,000 investment today would be worth over $200 million. So here's an IPO, here's an investment, and here's potential result. My logic behind selling had nothing to do with my not believing in the company. I was young, still green. I made money, I made good returns on my investment, and I thought that I would put money to better use. So as many very successful investors, they invest long term. And if you're investing and you believe in the company and you believe in the product, hold on to your shares.